We're back with our guest host, Rob Tetrault, portfolio manager at National Bank Financial, based in Winnipeg, but we're lucky enough to have him right here in Toronto today. You think crude oil is going to $60 US per barrel. That would be a good thing for the Canadian stock market. What do you think gets crude to 60 this year?
I think crude gets to 60 in some sort of negotiation / pact that will and I feel has to happen. I think we've seen a lot of inventories go up in the last while, and that's somewhat worrisome for some investors, but we've been in that range between 50 and 55, as you can see here on this fantastic chart that your wonderful team has put up. And last time I was on the show here, oil had fell to 47, 48, and I was of the view we're going to get back to that trading range. I think once we break on a technical basis through that 55, the next trading range is naturally a 55 to 60. If we see the OPEC agreement, if we see it kind of come to fruition, and I think we will, that'll provide range to move from 55 to 60. Long term, I'm bullish on oil, and short term, I'm mildly bullish.
What about stock markets generally, driven, of course, by the election of Donald Trump over the past 5 or 6 months, but cooling off recently as it looks like some of the bloom coming off the Trump rose?
You know what I'm excited about? I'm excited about the fact that there are people predicting the end of the world, and there are people predicting, we got another 10 years in the bull cycle. I love seeing that. I love seeing the opinion on both sides, because that means the market will not surprise us. In 2008, in 87, and every kind of significant correction that we've seen, every opinion was on one side of the ledger, and that's a bullish opinion. So right now we're seeing some on both sides. The market will not surprise us, in my view. We might see a small correction, but I don't think we're going to see anything drastic like some people are saying. I anticipate a kind of moderate to good year in terms of gains on the TSX, somewhere in the 5 to 10% range, which would be fantastic for portfolios once you put in the dividend in there. And the valuations, I think, are somewhat reasonable given what we're seeing in a forward earnings.
What kind of weighting do you have in equities compared to historical levels? Are you at the high end of your range on equities?
Well, fixed income is almost impossible these days. So yes, I'm at the high end of equities, and we're always looking at alternatives. And whether that's equity-linked GICs in the fixed income space, or even mixed mortgage investment corps, or whatever that may be, you have to. The fixed income space is very, very tough right now. Even the new prefs are good. So whatever we can get away from the 2% 10-year bond, right?
And cash position, where are you in terms of your cash holdings right now?
I don't believe in holding cash very much. I'm a firm believer in being fully invested. If we do a tactical shift, we go from one sector to another. So very low on the cash side. Canadian
stocks versus U.S. stocks, where do you see most opportunity?
I like the Canadian sector right now. Specifically, we've kind of trailed a bit this year. I think there's opportunity. If oil does come back, I think we could see a nice rally in Canada. I think we've been lagging, and I think eventually we're going to see some movement in Canada.
Thanks a lot for coming by. Great to have you on the show.
Thanks for having me, guys.